Good morning, everyone. It's, of course, nighttime on Maui, so if I say this evening and it's the morning when you're watching this, just bear with me as I always get these mixed up. What I want to go over, though, is what we saw on Wednesday was pretty good if you just look at the NASDAQ, Dow Jones Industrial Average, and S&P 500. But if you look at the Russell 2000, either via the IWM right here, or, oh, that's right, that's not on this one. We'll have to show it over here later on. I got stock charts up and I'll show you guys that there. But the Russell 2000 pulled back 1.09%, which was showcasing some real weakness in individual names. You can see some stocks that moved based on earnings like CDK, COTV, and COHR. Folks, this is not healthy price action whenever this follows some already choppy trading in all of those names. So whenever you see price action like this, like look at NOW, VEEV, you can just tell if we go to an arithmetic chart, if you compare the previous uptrend, for instance, on VEEV compared to how it's trading now, you can see that things are a lot more choppy, a lot more just see how smooth this looks and then how volatile this looks. There's just too much of that out there, and I noticed some massive breakdowns on very huge volume. And the main important thing is I've been warning everybody that this market's looked troublesome for a while, and one of the main tells was the Dow Jones Transportation Average. When it broke down here on the 27th of July, this was a big what the hell is going on, because you always want to see the Dow Jones Transportation Average and the Russell 2000 leading. So when the Russell 2000 looked like this, the S&P 500 looked like this, the Dow Jones Industrial Average looked like this, even with the NASDAQ looking a little weird, it was still extremely troublesome for me to see the Dow Jones Transportation act like this. This switched that day of the 27th, the model switched to neutral. It's remained neutral since then, but it looks like it wants to break down. The bounce that it actually had on Wednesday was very lame, and as you can see, that breakdown was followed by another above average volume sell-off, and then another above average volume sell-off, even though it's holding above the 200-day moving average. So the Dow Jones Transportation Average has come under some pretty ugly distribution, and now we're seeing that move into the Russell 2000. On top of that, the New York Stock Exchange advanced decline line, which I track, which I should have pulled up, but I didn't on stockcharts.com, had a massive rollover after breaking out to new highs yesterday. It's completely rolled over that breakout. So that's a fake out breakout, and that's always kind of a red flag to me, along with the new NASDAQ advanced decline line also doing that rollover. But more importantly, now that I showed you that Dow Jones Transportation Average, I want to go ahead and take a look at the oscillators. First off, let's look at futures really quick, just so I can tell you what's happening right here. If the lows that we saw intraday tomorrow break intraday on Thursday, look out below. But as of right now, futures are red. That's the Dow Jones Industrial Average. I don't know where they'll be by the time you watch this video. S&P 500, but the most important thing is notice is this low breaks, uh-oh. NASDAQ 100, this low breaks, uh-oh. Russell 2000, this low breaks, and it's very close to it as it's already down 0.18% after hours. Uh-oh. So keep all of that in mind. Now, don't forget, along with all this, along with the poor price action, along with me not going over in detail my new speculative long positions for the past 2 weeks in these video lessons, as I don't want any new trader whatsoever, anybody that's been trading for less than 5 years, taking any speculative long position right now. I've been saying that for 2 weeks, and what you're starting to see is exactly why. The market just hasn't been acting right. Once we start to break out to new highs, we should have continued immediately, immediate follow through, and the stocks that I'm long should have been producing much larger gains. This isn't happening because the VIX is at all-time lows. It's hard to have stocks move 100, 200, 300% when the volatility in the market is at all-time lows. So with the seasonal pattern as we enter August and September being the worst of the year until the third week of October, with the Russell 2000 having such a negative day today, with the stocks in my portfolios having just a very, very poor showing with some terrible breadth overall, forcing me to raise stops on almost everything. Keep in mind that fighting the tide of the market's not smart. It's 3 out of 4 stocks follow the market. And so if we look at the actual indexes, what I wanted to really show you is you'll see The RSI index is trending lower short term, confirming the price action. The MACD has gotten back up to overbought areas on the NASDAQ and is rolling over, and it's now below the signal line. That's not good. Don't fight that. I do not recommend anyone fight that kind of price pattern confirmation with the oscillator during the seasonally worst period for stock market returns, August, September, and the first 3 weeks of October. Don't fight the trend. I don't understand why people feel like they need to trade here. I was pissed every day that new long signals were showing up because I knew the chances are they'd fail. Now, if I don't take the long signals and they work and I miss out on those gains, I would hate myself about 5 times more than I would be upset that they all failed. So that's why I take them. Plus, whenever you're only risking $1,000 to $5,000 per position and your commission cost is $1 per trade and your max pain on any loss is $100, trust me, I understand what I'm doing here. It's like playing poker for a living. You got to be very measured with the hands that you play, and that's what I'm doing here. If I was taking 20% positions, 10% positions with like 1,000, 2,000 max pain dollar loss amounts, I'd be trading totally wrong here. But I've been trading safe for a while now, and now I'm going to be trading even more safe. The S&P 500 also. The oscillator's kind of flatlining here, but still short term, there's a small downtrend. But more importantly, the MACD is starting to roll over from the overbought levels, and that MACD histogram is confirming. So once again, stocks, seasonality, the indexes, I pay attention to all of this. Looking at the Russell 2000. This thing is really rolling over, and look at the oscillator, the RSI. It's below the 50 line. That means that the trend is down. On top of that, the MACD line has rolled over. It's well below the signal line already, and the MACD histogram is in negative territory. That's full on confirmation. The only index that's bucking the entire trend is the Dow Jones Industrial Average, and look at this V-shaped slow move into new highs. It's not like that we ramped into new highs with a 2% gain, flat line, and then had another 2% up day. We inched higher in a V-shaped manner each and every single day, where oscillator is now overbought on the RSI. The MACD oscillator is overbought. Eventually, it's going to have to roll over. So if you think the Dow Jones Industrial Average is leading this market, I hate to tell you, the Russell 2000 and Dow Jones Transportation Averages are the two averages you want to see lead. The average that you want to see lag is the Dow Jones Industrial Average. But instead, the Dow Jones Industrial Average is leading, while the Dow Jones Transportation Average, I don't know if the DJT works. Nope. I forgot what the transportation average was. Tran. Maybe it's Tran. Yes! You can see here, it's near oversold territory, so it can bounce. But until it gets back above the 50 line, it's not out of the woods. And the MACD line still, as it moves into oversold territory, isn't quite oversold. And I don't see a hook here. Do you see any hook? I don't. MACD has got a slightly higher low than the session before. But this is not a pattern that you buy. If it was an extreme oversold then turning up, and we had a big reversal candle on huge volume, and the rest of the indexes were looking good, maybe. But with this setup, no way. And more importantly, with the Russell 2000 looking the way it does right now, I am not interested in going long until this oscillator gets oversold and we work off the overbought condition in the rest of the indexes. And more importantly, I get better stock setups and more tight consolidation patterns. The patterns are getting very loose. Things aren't looking that bullish. The few nice chart patterns that I had setting up out there have deteriorated following Wednesday's session. I had a few stocks with Max Green Bop building sideways patterns. They have all deteriorated in the past few sessions. So I'm real. And one of the main things that was a red flag to me this summer is with the Russell 2000 hitting new highs and the Dow Jones Industrial Average hitting new highs and the S&P 500 hitting new highs and the NASDAQ hitting new highs. Do you know what was not hitting new highs? My perfect speculator scan. Back in January, my most loose perfect speculator scan had 200 stocks. Since the summer started, it hasn't been over 130, even with the stocks hitting new highs. So despite the move from January to here, my scan went from 200 to 130. So keep that in mind as my mouse dies on me. How funny. Aloha.